On April 2nd, 2025, US President Donald Trump has marked Liberation Day by imposing reciprocal tariffs on the major trading partners of United States of America. Now, this marks the protectionist move of United States moving from globalization to deglobalization and protectionist tendency where US has opined earlier of increasing the tariffs on partner nations, and now because of reciprocal tariff system and reciprocal tariff policy of Donald Trump, US has been imposing and US has been successful in imposing reciprocal tariffs to its major trading partners. Now, while Donald Trump won election recently on his America First campaign and Make America Great Again, reciprocal tariff system was very high on the agenda. And this reciprocal tariff, now this protectionist shift, according to several experts, has been even worse than the Smoot-Hawley tax of 1930s, which actually worsened the impact of the Great Depression of 1930s. Many experts say that this reciprocal tariff system is even worse than that. The significant proof can be seen on 7th of April 2025 when the markets of the entire world crashed. Lakhs of crores of rupees and dollars of the markets were wiped off. If we talk about the billionaires, billions of wealth was lost on Monday because of this decision taken by Donald Trump. If we talk about India, Nifty went down by 1,000 points, which was worse in the last one decade. If we talk about all of the markets of Asia, from Shanghai to Tokyo to Sydney to Hong Kong, all the markets plunged because of this Donald Trump's tariffs. And experts fear that going forward there are only two paths, either to negotiate or to escalate. And China has thought of escalating, and which is why China has further doubled down on the tariffs which China imports on US products, leading to a trade war which has again started in the world. India, although, has been cautious and has chosen to negotiate rather than escalate. Now, the highest reciprocal tariff by US has been imposed on Cambodia because according to Donald Trump's estimation, Cambodia imposes 97% tariff on US products. So US has imposed around 49% tariff. On Vietnam, US has imposed 46% tariff. On Sri Lanka, around 44% tariff. If we talk about some other major nations like Thailand, on Thailand 36% tariff, and on China, around 34% tariff has been imposed. If we talk about other nations like Pakistan, on Pakistan 29% tariff has been imposed. And if we talk about our beloved country India, on India around 26% tariff has been imposed by Donald Trump. Now you might feel that developed nations are off the radar. No, they are not so. On UK, 10% tariff has been imposed. On Australia, again 10% tariff has been imposed. On Singapore, on Brazil also, 10% tariff has been imposed respectively by the Donald Trump's administration. And Donald Trump has said that a 10% base tariff will be imposed on all the countries. And this is a significant increase in the pre-Trump tariff rate of 2.5%. So from 2.5% the base tariff rate, it has increased to 10% tariff rate for all the countries in the world. And this is a shift from what WTO suggested, World Trade Organization suggested, globalization, integration of the world economy into one. This is a shift against that. And this is leading to deglobalization and the tendency and the flow of protectionism in the entire world, again regaining momentum. Now, what these tariffs are all about, what will be the impact of this tariff on the global economy, on the world economy, plus India's economy, and how should the global economy navigate in the time of this particular crisis, and how should Indian economy respond to it? All the things we'll be trying to analyze and discuss in this particular session. Hello, my name is Preetpal Singh and you're watching Perspective. Now let us simply understand what do you mean by this term tariff. Now we have actually talked in great depth of detail in one of the previous videos where we have covered how tariffs came into the world and what is the impact of tariff. So let us simply and briefly understand. Tariff is usually a tax imposed when countries trade on goods and services. So simply speaking, a tariff is a tax imposed by the government on imported goods. So let's say I'm India. If goods in my country are coming from US and the good is worth $100, Indian government can impose a 10% tariff on it and make the price of that good $110 when it enters India's market. So which means tariff increases the overall price of commodities so that it becomes expensive when it enters the country, the destination country. And why tariff is imposed? There are two reasons. One is to enhance the revenue of the government, and second is to demotivate imports of certain goods, which is why tariffs are imposed. Now, second reason is very important over here, because if we want to demotivate imports, which means we are trying to build our domestic industries, we are trying to strengthen our domestic industries. So this will help the domestic manufacturers, because rather than now people being dependent on imports, people would be buying from domestic industries. Secondly, it will help in maintaining the trade surplus and reducing the trade deficit, because trade deficit happens when we import more than what we export. So if due to tariff, if we start importing less, our trade deficit will also come down, which will lower down our current account deficit as well. So domestic industries benefit, trade deficit lowers down, and on the top of it, we see that the overall GDP of the economy might as well grow, because exports minus imports is a part of the GDP. And if imports are less, GDP is going to go up, if all the other things are remaining constant. Now, if we talk about all these positives, when a tariff is imposed, it simply means that for United States of America, these tariffs would do wonders. Because on one hand, the revenue from these tariffs built the treasury of the United States of America, will enhance the treasury, and on the other hand, the trade deficit of United States would reduce, the domestic industries in US would benefit, and overall the GDP of US might also go up. So if we see it in a parochial term, just from the lens of United States of America, this tariff makes sense. Because Donald Trump says simply one thing, that if you are charging tariff from my country, for example, if I'm, let's say, take an example, let's say I'm from US. If people from China are charging tariff when US products comes to China, why shouldn't US also charge a tariff when Chinese products comes to US? Why should US give Chinese products free ride? China charges a very high rate of tariff when US products enter their country. There should be a reciprocal system. That is what Donald Trump talks about. And it makes perfect sense. It makes total rational. But the argument of several experts says that eye for an eye makes the whole world blind. Rather than imposing more tariffs, Donald Trump should have negotiated with these countries to reduce the level of tariffs which these countries impose on American products. That could have been done. And yes, Donald Trump gave them time as well to reduce the tariffs. But still, countries chose wait and watch. And then on April 2nd, Donald Trump, as expected, came up with reciprocal tariffs on major trading partners of the country. Now, till now, we have understood how US would benefit from the tariff. Second, let us understand that if US was not having these tariffs, then how US was at loss. So let's say when US products used to go to China, when US used to export to China, US had to pay hefty tariffs. So US products in China became very expensive, which is why US exports went a bit down. Because Chinese people, they were more inclined towards wanting to buy a good which is cheaper than the Chinese product rather than expensive. So US products in demand declined, which is why US exports declined. But on the other hand, Chinese products, when they entered US market, the tariff against them was very low, minimal, which is why when Chinese products enter the US market, they could still remain very cheap as compared to the American products. And if a cheaper product enter into the market, a consumer, without even thinking once, would buy a Chinese product because for the consumer that product is cheaper. So because consumers are very price sensitive. If same service, same good you are providing to a consumer with $100 difference, consumer would definitely buy a cheaper product. So which is why domestic consumers of US, they started shifting towards demanding Chinese products, demanding Indian products, demanding products from Bangladesh and different sort of other countries as well. So clothes from India in US became very popular. Clothes from Bangladesh in US became very popular. Shoes from Vietnam became very popular. And electronic products, electronic gadgets or cars from China became very popular in US. Which is why US domestic industries and domestic manufacturers were at a loss. Because of which now if the tariff is imposed, which has been imposed by the Donald Trump's government, US domestic producers will be the one who would be gaining. But there is opposite thing to it as well. Earlier, domestic producers of US, they were facing stiff competition from Chinese manufacturers. But consumers were getting benefited because consumers were now having cheaper products due to trade competition. But now due to tariff, Chinese products, when they will enter US, they will become expensive because of the tariff getting added onto it. A domestic produce of US was already expensive. So now consumers would be at loss because consumers would have to pay more for the same product than what they were paying before. So there might be an increase in domestic inflation in US and the prices of goods and services might increase. So earlier, the producers were at loss but consumers were at benefit when there was no tariff imposed by US. But now when tariff is imposed by US, consumers are at loss and the domestic producers are at benefit. This is how economic analysis of tariff can be done in relation to the United States of America. Now let's simply talk about the impact of these tariffs on the global economy plus Indian economy. Now if we talk about the global economy, as I've already told you, that the global economy, first of all, the stock market, the financial market of the global economy, it slipped down because of the investors' confidence being shaken overall throughout the world, which is why many of the investors, they started pulling back their money. Market came crashing down. And billions worth of rupees were lost in net worth for many individuals. That is one instance. Second impact might be in relation to the GDP and also in relation to the global trade. If we talk about India, India's GDP might take a hit because India's export to US are considerable. And because of this tariffs, India's exports to US might decline. Which is why India's GDP might take a hit because if we see GDP from expenditure method, GDP is having four components. One is consumption expenditure, second is investment expenditure, third is government expenditure, and fourth is net exports. Now if net exports goes down, the overall GDP of the country will take a hit. Even for a minuscule time, but it will take a hit, which is why several other agencies like JP Morgan, Morgan Stanley, several others have downgraded India's growth potential, the growth percentage which they see for India for 2025-2026. But of course, Indian government had remained stable, they have remained calm, and our External Affairs Minister S. J. Shankar, he has talked about engaging with US in a dialogue, constructive dialogue, and completing the trade agreement which is in talks for our country and US. If that trade agreement is done, then this tariff situation will be solved, at least for India, for the time being. Now, this recent stock market crash, if we talk about this Nifty going down by 1,000 points, it was compared to the Black Monday, which we saw in the year 1987, where also a significant stock market crash could be seen. Similar to that, again, on 7th of April 2025, we could see that particular level of crash. And it was all due to Donald Trump's reciprocal tariff. Also, our External Affairs Minister S. J. Shankar has said that over the last few weeks, India and US have talked about trade negotiations a lot and even more than what India has talked with Europe in the last 3 to 4 years. So India and US trade negotiations, they are going on in full swing and they might be culminated in the coming few weeks or coming few months. And if it happens so, then India might not be facing this brunt of the reciprocal taxation system or tariff system of US. See, the world's 10 richest people, they lost around $172 billion in a span of just 3 days due to these reciprocal tariff system. But if we look at this tariff system principally, it definitely makes a lot of sense. Because if one country is charging a tariff from another country, they should expect the other country also to charge the same extent or to similar extent of tariff as compared to the one country which is charging. So it definitely, parity makes sense. And through negotiations, if other countries lowers the tariff on US now, and US might reciprocate again and reduce the tariffs even further, that would be a possible amicable solution to this problem. Otherwise, this problem will keep on escalating as what is happening in case of China and US, which is eventually leading to a trade war. And trade war for the whole world in this globalized era would definitely be a very bad situation. And we as a global economy should strive hard in order to ensure that such type of catastrophes and crisis events doesn't repeat in future. And all the decisions are amicably taken at a world stage. Now, in all this respect, one organization named as World Trade Organization, which is a successor to General Agreement on Trades and Tariffs, that organization should play a considerable role by making the leaders of all these countries come together at an international forum and cumulatively talk about this tariff issue and all the countries reducing the tariffs simultaneously to boost the world trade. See, because economists, they have a very simple principle and formula that if trade happens, free trade happens in the whole world, all the countries are better off. But if trades are restricted, as through one of the tariffs, or there are other ways to restrict the trade as well, like implementing quota or different other parts, but if trade is restricted in any way or manner, it would eventually make the entire system worse off. Which is why doing trade or doing free trade is in everybody's interest and every country's interest. So now to ensure that the global GDP does not come down, India's GDP does not come down, and in US, consumers, they don't face a problem of higher inflation and higher costs. To solve this problem, we need to ensure that all the world leaders, they amicably sit together and discuss on this issue and try to solve this issue as early as possible. And the only remedy which is right now visible is that other countries also reducing tariffs on US and US reciprocating even further. I hope you gained some new perspective from this session. What are your views surrounding this Trump tariffs and its potential likely impacts? Do let me know in the comment section. I'll be very happy to read them. All the very best. Have a beautiful day. Thank you.